What is going on out there, peeps? All right, so let's get in what's going on with the cryptocurrencies, gold and silver markets. Okay. Yeah, there's some interesting news and something I want you to watch out for and be careful about. Okay. If you're thinking about buying precious metals, give our friends over there at Money Metals Exchange a consideration. The link is in the description. If you are a first-time buyer and you buy more than a half ounce, if you buy more than $100 worth of precious metals, use promo code Pimpy, Pimpy, and you will get a free half ounce of silver. As you guys know, right now I'm not on Facebook, but I do have Twitter. The link is in the description. So come back and join us, would you, over here on Twitter. Okay, right now, look, you can see right now, Bitcoin dropped down below 13,000, is now back up again. It's up $217 already for the day. So 1% increase. And also in Ethereum, you're seeing it go up, but I want to show you some quick trends real quick. You can see all of them, cryptocurrencies are moving, and I think I know what's going on, and I'll share that with you here in a second. So let's start down here at XLM. I want to show you something interesting about these trends. If you go to the 1 year, and you go right over here towards the end of the year, which is December the 30th, 2019. Back then, you could see over there was 4.5 cents for a cryptocurrency. So if whatever amount you put in, it's almost doubled. Now, we're not at the end of the year, but where we are today, you would have almost doubled your entire investment. So if you put in $1, you would get almost $2. If you put in $1,000, you would have almost $2,000. If you put in 10,000, you would have almost 20. Do you see how that works? Okay. So XLM, that's not too shabby. I'm just going to touch on the main ones. Litecoin, let's take a look at where you are. You're usually a disaster. Yeah, you can see the ups and downs. I mean, it looks crazy for the year. But anyways, you to get over here to December 30th, you'd have been at $43.55. You're now up to $59.16. What are we looking at here? It's about a 15.5 cent or $15.50 $15.50 increase. So, that's about a 30% increase. So, you would have 130% of your investment. In other words, if you would have invested $1,000, you would now have $1,300. Not too shabby. Let's go over here and take a look at some of these other ones real quick. So that's Litecoin. Let's do XRP. XRP for the year. December 30th, you would have been at 19.5 cents. You're up to 25, just a little over 25.5 cents. You're looking at about about a 6 cent increase, another 30% increase. So $1,000 would have gave you about 1,300 on that $1,000 investments. So let's go to Bitcoin really quick. Bitcoin, where you at? So you'd have been at $7,411. It's almost doubled. Almost. Not quite, but it's getting there. Okay, so we still have about $1,300 more for it to have doubled for the year. So that's not too bad. But let me show you something here in a second. But you would, if you'd invested $1,000, you'd had almost $2,000. Not quite there, but look at this. If you'd have known this was going to happen on March the 9th and you jumped all over Bitcoin and you invested in there, yeah, you're looking at, what is that about? It's about 200% increase and about 225% increase. That's not too shabby. You'd have more than doubled your money. Okay, but that's if you'd have known about it in March. Let's go to my favorite. Of course, I save it for last. You guys can see year to date. You got over here to December 30th, 136.28. It's now 413.91. What is it? $277. That'd have been more than 200% increase. So you'd have more than tripled your money. So if you put in $1,000, you would have almost $3,000 now. That's why I love Ethereum. All right, you guys, I'm just showing you what it is. I'm showing you these trends. The cool thing is, we're not at the end of the year yet, but the cool thing is where we stand right now, at least they're in the positive with the exception of XRP. Okay, here's something I want to talk about. Why you might see it also, besides the PayPal announcements and a lot of major corporations running into cryptocurrencies. Here's what I think is happening. Right now, gold and silver are running horizontal. In other words, they're not really going up too much. They're not going down too much. This is great for stackers. So this way, then, you could kind of count on the price to stay where it is, and you can keep stacking. It's better than it going up and you trying to keep up with the prices. All right, so this is good. This is not bad at all. But here's where it gets bad. What I think is happening is you're going to start seeing people in gold and silver see the cryptocurrencies going up, and they start panicking or they want to get crazy and they go, ooh, and they sell their precious metals and they go buy cryptocurrencies. This is bad. Okay, so I think this is another reason why you're starting to see investment in cryptocurrencies increase as people feel like the gold and silver market is stagnant. They're not gaining, they're not losing, they just get bored and they turn around and invest in something differently. If some of you were with me when I first started talking about gold and silver, you have more than doubled your money on silver. As a matter of fact, you're 2.5 times where you were if you bought it way back when I first started talking about it. I believe it was around $11. All right. So you're probably going, yeah, you know what? I made a lot of money. I'm going to go ahead and sell my precious metals. Don't do that. All right. Diversify, you guys. There's nothing wrong with having a little bit of everything. I mean, I have most all my stuff in gold and silver. There's no doubt about it. I've told you guys that many a time. But there's nothing wrong with putting a little bit over here in cryptocurrencies. You can see it's still continuing to climb. Will that trend continue? We will see. I think a lot of people are curious to see what is going to happen during this election because this election is going to affect a couple of things. All right. And we're going to listen to some investors talk about some of the stuff that they are concerned about and some of the stuff they think they see is going to happen here during this election that will affect our investments. Okay. So come over here because Kitco, I'm going to give shout out to Kitco because Kitco is I go to them as a form of resource when I want to hear some news. So they have great guests on there. So I'm going to show you this first one. This first gentleman here his name's Chris. He brings us some interesting things. I want to touch base on him just a little bit. Just check him out.
Invite your response. Chris, welcome to Kitco. It's a pleasure to speak with you today.
Yeah, thanks for having me, David.
Before we talk about your forecast, Chris, let's look at what's going on in the marketplace today. Robinhood, the trading app, has advised its users to buffer up on cash and prepare for more volatility up ahead.
Buffer up on cash. Is this an investment company telling you to store cash? That's interesting. I don't think any investment company has ever told people to store up on cash. Now, you guys know this. I told you it's important for you guys to store up on cash. Keep it like 6 months worth of bill money plus 10% for emergencies just in case. If people start panicking based on what we think might happen after this election on the market, you might see a rush on banks.
Ahead in the markets, have you ever seen a statement like that before from a broker? I mean, they're not the only ones doing it, by the way.
I'm actually surprised they're doing that, but I guess they can see huge volatility coming. I mean, a couple of weeks ago, we saw Interactive Brokers tighten their margin requirements, so which is really interesting. When they sent out that issue and it went into effect the next day, the stock market actually fell 2.5%. Interactive Brokers, huge institutional side, huge retail side, and people always do the same thing. They always buy the house just outside of their price range. They always buy a few more shares of a stock than their account can really hold during a volatile time. And so when they up that margin requirement, people, I guess, were forced to liquidate positions. And I think that was a good reason why the stock market pulled back. I mean, you look at the CME, Chicago Mercantile Exchange, they loosened off their circuit breaker on the indexes because I think they see so much volatility coming. They don't want the circuit breaker to get hit multiple times.
We're going to be talking about volatility. And
Circuit breaker is whenever the market starts to drop too much, they freeze you out of your account. So for those who have stock and you start panicking, you're not allowed to sell off. You lose access to your stock. It's a safety measure to keep the market from crashing too quick is what it is.
And your outlook later on in this interview. But do you agree with them? Do you see a lot of volatility coming up?
I do. As much as I don't want to be bearish, I mean, I think this is all going to unravel into a pretty nasty way, but it's
bearish means he thinks the stock market's going to go down.
It's really going to come into COVID. If the second wave of COVID really wreaks havoc and locks down North America or Canada and the US gets really strict on their rules, that's going to put us into a death spiral. We'll do the double dip scenario for sure, is my thinking on the stock market. And so you got to be aware of it and you got to be ready.
Yeah, we're going to be talking about the stock markets later on. Do you, as a trader, do you want to see volatility?
I do. I mean, volatility is great. I mean, big moves mean lots of opportunity. You just got to make sure you're on the right side. You don't get over positioned, which is one of the number one things that people do. And that's the one thing I really stress with the traders that that follow me with my newsletter is I focus on risk and position sizing because
So here's one of the things when again, I talk to my friends. They're investment brokers, but you know, when speaking to them, they said something interesting. I said, I told them they know about my channel. We talk, and my friend said one thing you should be teaching your subscribers right now. And so I'm going to mention this to you. He says, as investors, okay. He said they should be studying the markets right now. What he meant by this was saying you should figure out what stocks perform really well or stay consistent that pay out dividends um, when the economy is doing fine and there's no issues. And the reason for that is this. He said right now is not a good time. Even professionals are having trouble keeping track of what's going on in the market. He said this is what you should be doing is looking at those blue chips, figuring out like the good ones like Apple, Tesla, all them ones that these stocks are all going to take a hit if the market crash. It's going to crash. So for those of us who are positioned just right, let's say the revaluation happens with the dinars, you got a lot of money and you have a great thing with your precious metals, and then you end up with, millions of dollars. So he was saying this. So when we get to when we get to the other side of whatever's coming up, you just don't want to sit on your money. He says this would be a good time as the markets start to recover. So let's say your favorite stock right now is Apple. Let's pretend like Apple costs $1,000 a share. You're thinking to yourself, man, I can't afford that. That's too much. Then all of a sudden this crash happens and now the stock drops down to $100 a share. So, you should be eyeballing that. You should be paying attention to, and he said, look at the 5, 10-year trends, just like I showed you guys on the cryptos. Go down your favorite stocks and see how they performed. You want one that's been kind of consistent. Maybe it's almost even, but slightly going up. You know what I mean? Those are the ones you want to invest your money in. This is a good place. You don't want to keep your money in the bank ever, ever. No rich people keep their money in the bank. So what they do, put them in stocks, ones that have very little volatility. You know what I mean? So they balance it out. Some that are riskier than others, some that are safe like bonds and stuff like that, and then the rest are in those stocks that pay out dividends, but really don't have a lot of volatility to it. So those are the things that you should be focusing on right now, so that you know what to do with your money when we come out on the other side. It's a great idea. So again, I just want to play this part because Robinhood's now telling people to buffer up on their money. Everybody's getting ready for a very volatile stock market, which I told you is stocks are not a good place to be in. We'll see. The election is going to play a huge part of this, but I want you to listen to what this guy has to say real quick about what's going to happen in the election and how that affects us.
Well, what surprises me the most is that Vice President Biden and the Democrats are so anti-investor. It's just remarkable how they want to eliminate, not just raise taxes on capital gains, but they want to eliminate the long-term capital gains rate, which means taxes will go up to 40%. They want to make major changes in estate planning.
Okay, so real quick, let me break that down. We want Trump to do away with capital gains tax. He's saying the Democrats want to do away with capital gains tax as well. But what they want to do then is increase your normal taxes up to 40%. So this doesn't see capital gains only affects those individuals who gain from an investment. So if I buy a house for $100,000 and then I sell for $300,000, I have a gain. I've made a $200,000 profit. So you pay taxes on that gain. So what he's saying is, and that's only for investors. He's saying they want to do away with capital gains tax and tax everybody and bring it up to around 40%. Now, the other thing he said, which was at the end here that it caught my attention and I want to share with you because it's interesting. Let me rewind just a little bit.
Capital gains rate, which means taxes will go up to 40%. They want to make major changes in estate planning.
Estate planning. I told you guys what's going on. You guys are not watching. If you guys are not watching my videos on the reset, you're missing out. Because what he's talking about, the estate changes. All right. I told you guys that World Economic Forum wants to launch what's called the Great Reset. They want everybody to go 100% into a digital currency that they control. That means you have no say-so what happens to your money. Literally, you don't. So if the money's in there and they have a bail-in, you can't even protect yourself from a bail-in. If your money is in there and they have super inflation, they can tax your money away from you. If your money is in there and you're saving up too much, they could lower the interest rates to negative interest rates, and you start losing money. They want you to constantly be spending your money. This is a debt-based economy that they're talking about. So that's the changes. They're no longer going to allow you to have what's known as generational wealth transfer. So if you have $10 million and you want to pass it on to your kids, no can do. That's what they're talking about.
There's a lot of things that really go contra. I mean, we as investors have fought long and hard to reduce taxes on investing. And so I'm surprised there hasn't been a lot of pushback on that. Right now, just like in 2016, the Democrats are leading in the polls. They're leading in the gambling election betting odds. But there's no guarantee that Democrats are going to pull it off, because the people, they're not excited about Biden. It's more of an anti-Trump type of a vote. So I think you could have a seismic change on November 3rd that will cause investors to sell their stocks dramatically, because if you're going to raise the long-term capital gains rate, you know, how many people have tremendous profits in technology stocks and gold stocks or what have you? Why not take money off of the table and sit and wait?
So this is what I like about Trump's idea about removing capital gains tax altogether on investments. What this does now, it transfers the wealth back into the hands of the people. So instead of keeping your money in the banks where it just sits there or draws like 0.5% of an interest rate, instead of doing that, what Trump's saying is he's encouraging people to take money and invest it into companies. What that does is when you invest in stock money into stock, it gives more money or capital to the companies to use to continue to change and improve, so that more innovation, more changes, stay modernized with their equipment. You know what I mean? It's great to do that, okay? But you get a reward for helping a company be successful. So what that does to corporations and companies around the United States, the Democrats are going to go, oh, that just helps the wealthiest. No, it doesn't. Because when the wealthy have the money, they invest it into companies and have employment. Okay? Now, what I think should be offered is stock options should be offered for employees. This way, then, the employees also benefit in the growth of the company by being there and helping the company be functionable. So that's what it should be. And I think there should be what's called instead of you hear people talk about a minimum wage, how about a maximum wage, where there's a plateau, like corporations cannot give out bonuses more than $1 million to their executives, and employees can't earn more than, $1 million per year, and that the money should be invested back into the company, X amount of it, and the rest paid out in dividends. You know what I mean? But you do want the company to invest in other things so it has a financial foundation. It's very sturdy. So if something should happen to that company, they're not relying 100% on itself to survive. If they have a diversified investment portfolio, the company does on its own, then that helps it, when the company is not performing well, it helps it to survive when it needs liquidity in order to fix whatever problems that they're having. All right, I know, President Pimpy, I'm ready, man. But nonetheless, we do want this. We want to do away with capital gains. This will allow individuals like us to buy houses, invest in real estate, and then when you go to resell, you don't pay any taxes on that gain. If I invest in gold and silver and it goes up 500%, I don't pay any taxes on that gain. Do you see what I'm saying? So again, I like what this guy's saying.
I'm rather skeptical. I'm rather bearish on the outlook if the Democrats win. I mean, the market is suggesting a don't care attitude about this seismic shift that's about to occur if the Democrats pull it off. So
it's going to shift because we know they are proponents and going to be partnering up with this World Economic Forum to push us into what's called the Great Reset. You guys really need to watch my videos on those if you have not yet.
So it remains to be seen. We'll find out on November 3rd.
Well, Mark, when you look around at the stock markets and other markets as well, it seems to me, and correct me if I'm wrong, but it seems to me that investors are pricing in a Trump re-election. Is that correct?
It seems to be the case. There have been some studies to show that for a long period of time, if the stock market is up for the 3 months before the election, that the incumbent party should win. But this is a totally different animal. You've got Donald Trump, who is not considered your traditional president. He's not presidential in his behavior. There's a lot of hatred toward Trump that you haven't seen. You'd have to go pretty far back.
Yeah, but this media is the biggest portion and the reason for this hatred. They keep fanning these flames
to find hatred for a president like you have today. And in addition, we're still in a major recession. I mean, even though the stock market is near all-time highs, the economy itself is making a slow recovery. It's not a V-shaped recovery. And in fact, I kind of like Biden's view of a K recovery, where some people are really benefiting and others are still unemployed. If you're in the entertainment industry, if you're in the travel business, leisure, there's so many areas that have been devastated. Restaurant business, where the recovery is just not there at all. We can't all work at home online. You're at the offices there. I suppose you could do these interviews at home, but there's only so much you can do. Education is subpar now with this online education. There's a lot of negatives. So I like the K phrase, the K economy that Biden uses. I think that's a more accurate description. So given all those factors, plus mail-in, almost everybody's going to be voting by mail this time. That makes it a lot easier for...
Okay, we don't have to keep going. He's going to explain why the Democrats will benefit from mail-in voting because they'll commit frauds. All right, and what he's saying is, look, if the Democrats get in there, they're going to crash the economy. They're going to try to move us to a socialist agenda. That's exactly what I've been warning you guys about. That's their goal. That's because they're anti-investment. The whole push for this global economic reset that you're seeing, the Great Reset that the World Economic Forum is pushing, the IMF is now pushing as well. This whole movement is exactly that. They don't want people to be investing. They don't want generational wealth transforming. So again, but having said that, if they do make this move, the market is, everybody's predicting a market crash. Now, I know they said that about Trump, but actually what we saw prior to the election, the difference is this. Companies were more optimistic about having Trump in office. They knew they could do better economically. So what we heard, people going, oh, the economy's going to crash, was just Democratic hype, because the actual investors and investment companies did not say that. They didn't say that. As a matter of fact, they were more optimistic about Trump being in office than they were the Democrats. So even though the media and the Democrats are saying, oh, the market's going to crash, they were trying to use fear tactics to keep you from voting. This is not the same. This isn't, hype trying to keep the Democrats from going to office. No, these are now, you have these investment firms saying, no, this is not the same. This isn't fear mongering or hype. This is the goal of the Democrats. More regulations, higher taxes on corporations, more trade agreements that will, once again, ship our jobs back overseas. They want to kill the oil industry. So you have to ask yourself this. What type of unemployment numbers do you think we're going to be looking at? They're going to try to blame the coronavirus on it, and then they're going to try to blame Trump, saying, oh, yeah, it's Trump's policies, because that's what they do. Remember when Obama was in office, he kept saying, well, it's because of Bush. Oh, I couldn't recover because of Bush. Oh, but after 8 years of it, come on, man. Trump got in there, and was able to immediately do something about it. It's a huge difference. We definitely want a person with a business mind, a business background to be running this country, and not a career politician that caters to special interest groups, special interest needs. Okay, so anyways, what are we looking at? Gold and silver, people. What you're looking at is we benefit either way. We know Trump wants to go back to the gold standard. If the Democrats get in there, here's the problem that I have in case you aren't aware of this. They're going to start doing universal basic income is what they're pushing for, which all sounds fine and dandy. You're thinking to yourself, oh yeah, I want some free money. Who doesn't want some free money? And I don't have to work for it? Ooh, yeah. And then they want it 100% digital wallet. You have to create it in order to get it. The problem is once you get that, then they want to do 100% digital currency only. And what they're saying is this. Check this out. You want to talk about stealing more of your wealth? You see, gold and silver will go up. They're going to allow. As a matter of fact, they might jack it up pretty good. But their real goal is this, because this is their policies. This is what they want. So you can sell your precious metals for this new digital currency, and they'll pay you in your digital currency. But you can't use the digital currency to buy precious metals. And since that's the only type of currency you're going to have, how are you going to be able to purchase precious metals in the future? They have no intentions on letting you do it. They don't want wealth transformations. They don't want you to have wealth growth. Do you see what their goal is? When I keep telling you people, it's no longer about Democrats versus Republicans. This is the left versus the rights. This is the new world order agenda, whether you believe in it or not, or the globalist agenda. All right, anyways, I just wanted to show you this. So for gold and silver people, this is really good. What I think is happening and contributing to the growth in cryptocurrency right now. If you guys want to buy cryptocurrencies, again, I got a link right down below in the description. Follow it, and it'll take you to where you could buy cryptocurrencies. But I'm thinking what's happening is you're seeing people are not excited or turned on about what's going on with gold and silver, and it's stagnant right now, and so people are bored with that, and they're just selling their precious metals and moving into cryptocurrencies because they see the growth, and they're like, ooh, I want to jump on this bandwagon. But I keep telling you guys, don't do that. Precious metals is the safest bet. You can diversify, but try not to sell your precious metals. As a matter of fact, don't do that. Try to avoid that at all, to go jump on this bandwagon. All right, you guys. Anyways, I think that's part of the big thing contributing to the growth of cryptocurrencies, but just be aware that it is going, and there's a lot of corporations moving into it, which is a good sign. But again, I still trust gold and silver more than anything else. All right, you guys, that's it for now. I just wanted to share this information with you. And if you guys like the video, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. Thank you.